repo. A lot of people are talking about that. There's a lot of these very alarmist tweets on Twitter about the central bank, the Federal Reserve, pumping $50 billion into the financial system. This is an emergency liquidity operation. Everything's about to crash. Maybe it is, but I don't think so. I'm going to show this to you in context, what is happening now versus what happened following the repocalypse of 2019. The only difference between now and 2019 is that the Fed is monitoring the situation now, whereas in 2019 they weren't until it exploded. But is $50 billion particularly high? Not yet, but it will get higher. Exactly when this all falls, I don't know, but what I do know is the last time this happened, COVID occurred shortly afterwards. And many people say that this was an excuse to print money. Some people say it was more than an excuse, and I won't get into any of those ideas here. But you know what I'm saying. This is going to be a very interesting test as to what the nature of the COVID money printing really was, because the same thing that happened right before COVID is happening now. Liquidity is drying up all over the world, and it looks like if 2019 and what happened at the end of that year was a planned operation to print money, something like that is going. This is what is happening now. There's a blue line and a red line. I've shown this many times on these videos, and now we have finally crossed the threshold where the blue is above the red. The red is bank reserves. The blue is the amount of cash being traded, the amount of reserves being traded for Treasury securities every day. You can see that we have broken through $3.2 trillion on the blue line, and we have broken below $3 trillion on the red line. So there's more reserves being traded than reserves that exist today. How is this possible? I don't know for sure. I suspect central clearing of part of that cash flow is responsible, meaning if there is a clearinghouse that is canceling debt between several parties that owe debt to each other, the volume is measured as all those banks paying loans to each other, whereas the debts are canceled out if there is a central clearinghouse. So some of the volume that is being traded does not actually exist, which is why I believe that we are over 100%. I don't think this can continue for long, and this is why. We are already at the stage where the central bank, the Federal Reserve, has to provide the missing cash itself because there's not enough reserves to go around. There's only 2.85 trillion, whereas there's 3.2 trillion in reserves being traded every day now. And that is why some of this money has to be supplanted or supplied by the Federal Reserve. We saw this in the headlines on Twitter and other social media networks a few days ago that the central bank, the Federal Reserve, has printed $50 billion and now it's printed over $20 billion. And this is huge and it's never been this high. Well, that's not exactly true. It has been this high. It's been much higher. We're going to go to the next chart to show you that these headlines that are saying, or these tweets that are saying that repos have never been this high, not true. I wouldn't say they're lying. Post-repocalypse, you can see it starts here on the left side on October 2019. So just before that is September 2019. And that is when the repocalypse happened, when repo rates went to whatever it was, 10% overnight. And then the Fed had to act immediately after. You can see at the beginning of this chart, there are no repos. There's no blue lines in that little margin at the beginning of the chart. But then it starts at around September 17th over here, and it's about $50 billion where we are now. It's between 40 and 60. You can see this first bar over here. But we had been above that line following that date many times. It was consistently above 50 billion, not every single day, but pretty much from September 2019 to about December 2019, it was usually above $50 billion in daily repos. It dropped off a little bit in December and then January 2020. And we all know what happened here. The lockdowns of infinite wisdom and compassion. That's what I call them because, yes, they were. Wisdom and compassion personified in the lockdowns, which saved the entire planet. And I won't say anything else about that. So you see here, the record for repos was actually $152.75 billion on March 17th, 2020, when the lockdowns were instituted. So when people say that 50 billion in repos is an all-time record, it's never been this high, it's not true. It is true that the standing repo facility that they have now has never been this high, but there's no economic difference between a standing repo facility and a repo facility that's on the fly. It's all the same thing. Dollars are dollars. It doesn't matter if you're standing there or sitting there or lying there or flying there while you're doing repos. Doesn't make a difference. Repos are repos, and they've been higher. When will this finally spill over into the rest of the markets? Well, I don't know, but I can tell you that the weakest part of the markets that have been the weakest since treasuries started to fall and interest rates started to seriously rise when the Fed started hiking interest. Of course, lockdowns would be pretty bad for those things because when you lock down, people stop going to offices to work and they start working at home, and then that becomes a habit, and then the office real estate isn't worth much because nobody's going to it anymore. Nobody wants to renew their leases. So we have here from TREP. The TREP CMBS, commercial mortgage-backed security delinquency rate, resumed its climb in October 2025, jumping 23 basis points to 7.46%. We'll just read a few paragraphs here. In October, the overall delinquent balance rose 1.1 billion to 44.6 billion. That's about the size of the Madoff Ponzi scheme, which was 50 billion. All 5 of the major property types saw increases in their respective delinquency rates. The largest rate increase was seen in the office sector, which soared 63 basis points in October to set a new all-time high of 11.76% after retreating by over 50 basis points the month prior. Earlier this year, the office delinquency rate hit new record highs of 11.08%. In June at 11.66% in August, both now eclipsed by October's new peak. So we see office CMBS getting worse and worse and worse. And now that culture has changed and offices are no longer in demand because of the lockdowns of 2020, the wisdom and the compassion of those lockdowns had the unintended consequences of making office buildings almost worthless because nobody goes there anymore. Anyway, one more sentence here. The second largest rate increase was in multifamily, which rose 53 basis points as delinquency rates to 7.12% and topped the 7% threshold for the first time in nearly 10 years since December 2015. So, how much longer until something in here implodes? Can't be long now. We're already at record highs in office delinquencies. Now, there are so many bubbles that still exist because of the money printing of 2020. Follow closely is actually the Bitcoin bubble. You can't even call Bitcoin really a bubble, and I'm waiting for all the comments below to tell me how I don't understand Bitcoin. Well, that's true. I don't understand Bitcoin. I have no idea what it is. And you know what? Neither does anybody else, because it's not a thing. It's just a code to an empty safe with an empty safe inside of it, and so on and so forth, until you get to the final empty safe, which has nothing in it. But anyway, this is Bitcoin in gold terms, how many ounces of gold it costs to buy one Bitcoin. And the high we can see is still back from October 2021. And yeah, it was briefly broken for about 2 weeks in late 2024. But that breakout was a false breakout because it could not follow through. And we see the triple top was confirmed here. And now we are at the trend line that has been in place since the end of the crypto winter in 2023. If this trend line is broken decisively, we have the final line of resistance at about the 200-week moving average at 22 ounces of gold, just below 22 ounces of gold. Once this falls, that should be the signal that all the other bubbles are popping. And the Fed is going to have to print a lot more dollars to reflate everything. Everything will be reflated, including Bitcoin, except the only difference is that the thing that's going to go the highest, the fastest, going to climb the fastest is going to be gold and silver. And everything is going to become a lot cheaper in terms of real money as the value of credit falls and falls. What I'm saying is that there is one more printing round ahead of us. We were in the repo stage of that, and we saw in 2019 only took a few months from September 2019 to about March 2020. What is that? 5-6 months to initiate the next printing round. This time could be even shorter. Is there going to be an excuse to print the money? Is it going to be war? Is it going to be another disease? Is it going to be something else? We really have no idea. We have no idea what really caused the printing round of 2020. Was it planned with whatever happened that year? I'm not coming to any conclusions here. I actually don't know myself, but this would be a good test of whatever you believe happened then. Something similar